Our next host going live just after this. Stay tuned for Chris Pulver.
'Twas the night before Christmas, and all through the house not a creature was stirring, except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at a1trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Good morning, everybody. Happy Friday. So we had a 2 standard deviation move on AVGO or Broadcom. Nancy Pelosi just killing it this morning. So party at Nancy's house this weekend. Anyway, we're at 219.44. I looked at the pricing on this one. It was the average move on Broadcom earnings was 9.31, but the last 10 prints, we've seen a lot of 5% moves. Based on my calculations, I would have been calculating about a $9 move. Okay, a $9 move, and we jumped up $37. So that is like a 3 to 4 times standard deviation move. That's pretty wild. Now I say that at 5%. If I had given the average like it shows in my earnings at 0.09, so 0.09 times a closing price of 181 times 181, about a $16 move. It still doubled that, like more than doubled. So that is a crazy wild move on AVGO. I did take a trade on it this morning. I'm not taking this as this isn't a Pulver alert trade. I'm tossing the trade in as just a potential. There's no market maker levels above like 190 when this had a move. Like we expected to see like a 195 upside or like a 170 downside, and jumped up to 220. So I am fading this move today only. So it's not really a trade that I would recommend getting in. But anyway, I took the trade. So I did a bear put spread. So I bought the 220 put and sold the 217. I only had to pay $1.10 for it. So I'm going after $1.40 profit per contract. That return on capital is pretty favorable. So if I win the trade today, I'm getting 127% return on capital. But I need to see price, fade off of today's highs, which is around 221, and try to get back below 217.50 by close today. Also had a little winner on QQQ. I took a small loss in the SPX this morning. Price is pushing a little bit lower. We've seen a lot of gaps and a lot of chop this week. I do have a chart to share. If you're looking at some levels, okay? I'm going to talk about these in the charts in a moment. I spent an hour yesterday at my 3 p.m. live session on my YouTube channel doing this. If the SPY is getting below 600, or the SPX is below 60.18, or the ES is below 60.49, or the QQQ is below 515, that would be where the cracks are happening in the market. That's key resistance becoming support. If that support isn't offered and held, that's where I see the bears getting the upper hand this last part of the year. Now, we know the Fed's coming next week. The probabilities are still going to cut. Let's just zoom out for a second, all right? Coming into the Fed next week, everybody can see this. So we have a previous high right here. That is either support or it's not. And so looking at this recent structure, when we had all these little tiny melt up higher, like 0.1% higher, 0.1%, oh my gosh, 57 all-time highs. Well, we just hit an all-time high again this morning on the QQQs. It was 530.64. Now it's 531.57. So the Qs keep going. A lot of that was thanks to Broadcom. The SPY, not quite there. The SPY has been playing games with all sorts of gaps this week. We had a Monday fade, Tuesday follow through. We ripped on CPI, hit the backside of the trend line. PPI to today, Thursday, Friday, really price hasn't gone anywhere. So whether we stay here for the day or we go a little bit lower or a little bit higher, I don't know. So long story short, there are some key levels to watch. The Fed coming into next week. If the market is going to bounce, watch for this low or watch for this low to offer some support. Okay? If the market offers support and we have a Christmas and New Year's rally, then perhaps we find it at a level support. There's buying interest to come back in, try to get back to these all-time highs, maybe squeak out another all-time high or so by the end of the year. Okay? Like I said, if there's going to be some cracks in the bull market, it would be below this level, in my opinion. So if we're below 60.18 on the SPX, if we are below 600 on the SPY, you can see kind of the similar take. Here is resistance, and there's my support. So do we have room? I mean, we're right in the middle. Fed coming next week. Is the Fed going to get this market at all-time highs again, or is the Fed going to see the market get faded? I don't know. Okay, what we do know is the probability remains very high that we're still going to see a rate cut. Like 90-some% this week was the probability, 96.7%. Even with higher inflation readings this week on CPI, PPI, doesn't matter. Fed's still going to cut. Okay. The press conference with Jerome Powell, it's going to be interesting what they say, what he says, rather. I'm sure he'll be a crafty veteran and just dodge all the direct questions. It's probably going to have something to do with employment, U.S. economy resiliency, inflation numbers. We're watching month to month. We're watching blah, blah, blah. Same thing as always. But what does price do? Whatever it wants. Okay. And I am regretting my AVGO trade this morning, despite the small risk, but we'll see what happens. Chart alarm still set. Otherwise, this thing rips. If the market finds a way to get to some fresh all-time highs, let's go to the Qs. I mean, the Qs are fading. So I guess I'd make a gamble this way. If the Qs fade to Thursday's close, then that might give me a chance on the AVGO trade this morning. Let's talk top down. Let's talk currencies. Let's look at our currency strength. We got Euro on top. What? Oh, Japanese yen a little bit weaker. Volatility-wise on top and bottom is pretty light. Euro yen going higher this morning. Yesterday's currency strength, we had a big move out of the Swiss because they cut by 50 basis points, which is a pretty nice surprise. The Aussie held rates this week. The Bank of Canada cut by 50 basis points this week. The ECB cut by 25 basis points this week. The Fed and the BOJ on tap next week, Wednesday and Thursday, back to back within 24 hours. Those are two major central banks. That'll make 6 for this 2-week window with U.S. data out for the inflation readings. Market doesn't seem to care that we have higher inflation. Okay, maybe I do. All right, so yesterday I was a little bit, I was just talking like this is what I'm doing in the portfolio. I can't sit here and justify buying stuff at all-time highs. I mean, I put a trade yesterday in my Pulver alerts on Tesla. And I mean, we're sitting here at 429. We're at all-time highs. It looks like I should just buy more Tesla. But I'm going to wait and try to get filled on some volatility entries. If we have a pullback or a test or a check of some sort, I'm hoping that we have some type of check back to this previous resistance. So the nice thing is my exposure on Tesla that's still running is like 99% probability of profit. So whatever I do show on Tesla is still running. SPX, here's Tesla right here. So year to date, $9,500 on Tesla. I haven't owned a single share this year. These are all option trades. What I have left is a bunch of very low dollar amount, like way out of the money, 99.5% probability of profit. Even to this one, 97% chance of profit. These are all ratio spreads that are still sitting on $3,000 of open positions. So when these close up, great. Nice run on Tesla. But I'm not going to buy these things at these highs. It's that simple. Like if I was still if I still had shares and I'm owning the shares, fine. I'd hold it. I'd trail it, but it's all options. And this just came up yesterday. Chris, would you put on like credit spreads right now? No, not right now. Because look, I was interested in owning shares of Tesla, like 100 shares or more in the 200 range. Now that price has doubled. I was willing to allocate about $10,000 to $20,000, $10,000 margin, $20,000 cash, willing to allocate to my portfolio. Now that's doubled. So I'm not interested in owning the shares. Now it's all options. Now what I am interested in as far as ownership is I set the dollar amount that I want to own. So rather than owning 100 shares, I'll just allocate a dollar amount that I'm comfortable with, and I can play the dollar cost average game. Okay. All right. There you go. Daniel killing it on NQ as usual. That's no surprise. All right. What else we got going on here? Let's go dollar, gold, silver. We are clinging to a slight gain on the SPY because of the gap higher, but that is a fractional showing 0.11%. Oh, I guess that's because of yes. I mean, the direction today is actually red. We have a close from yesterday's candle. We gapped higher. We faded that move. We might just spend the day sideways. I don't know. But if we end up taking out the low for the day, I mean, do we come back and revisit the low for the week? I'm just curious how directional today gets on Friday. I might look at another opportunity to put in a trade on SPX. If things kind of quiet down and look a little sideways, then I might put in another trade on SPX. Okay, but I'll keep an eye on it. I want to see some, kind of some chop going on, and then I'll put on a trade. Qs, all-time highs at 533. Wow, that's a pretty good run. Right out of the gates, hitting all-time highs, but you can see here kind of quickly fading. We go to the Dow. The Dow is break even on the day. Again, we are, total opposite price action. A slight gap, hit the lows, and we're back to flat. Russell is actually down on the day. So we were up, faded hard. So Russell and Dow are down. VIX, a little bit of upside on VIX today. Let me switch this back to the SPX. Let's go this way on the chart. VIX is still down on the day. We might see some VIX activity next week. We might not. I mean, the Fed has the power to open up the floodgates, give the market an excuse to move. I'm looking for, whether it's pure volatility and chop and the market doesn't really go anywhere, I would still expect prices to go somewhere between $5 and $10 higher in the SPY. So that could be 50 to 100 points one way or the other on the SPX. Match that on the NASDAQ. I mean, NASDAQ usually has like a 20% higher move than the SPY. So if you're trading the Qs, if we get a let's say a $10 move on the SPY next week, expect like a, $12 to $13 move on the QQQ. So that's what the market likes is we've got noise next week with the Fed. Watch price. Jerome Powell's not going to say anything to really shock the market. It's doubtful. We're at that time of the year. It's either say as little as possible to let the market just still stay in this like euphoria state and let it keep melting up, or say something that's probably a bold-faced lie about how good everything is and try to encourage the market to go higher by the end of the year. But we'll see. And in addition to my key levels where it's like if the SPY breaks below 600 or the Qs break below 515, I'm watching those levels. Also, going into 2025, if the 10-year note is going higher on the bond yields, or the 10-year and the 3-month become disinverted. Those are two big things that the market's going to pay attention to. On top of that, you've got higher inflation and you've got a jobs number that's starting to increase or unemployment that's starting to increase. It's not going to be overnight. Like nothing's going to crash overnight. But I'm watching price, and I'm watching some key levels that would have a big impact on where this market can go. I do think that Q1 is probably going to be kind of more of the same. Q4 earnings are probably pretty strong. This market's had a heck of a rip this entire year. We've seen just tons of inflows post-election and that momentum. And then there's still opportunities for buybacks and there's still opportunities for mergers and acquisitions. Like there's a lot of systematic things that keep these bull markets going, and they drift and they run. And that's why the famous saying is the markets can remain irrational longer than traders can remain solvent. So if you're trying to short this market or fade this market, it could be months and months away, right? So if I am trading a short, I'm typically hedging with options and it's usually, cheap. But otherwise, the melt up is good because my portfolio is typically tilted bullish in a bull market. All right, DXY. DXY has continued to do what I thought it was going to do this week, which is bounce off of support. You can see it on the 4-hour chart really, really cleanly, right at the 200 moving average. So we've been in a bull trend since that squeeze. So bullish trend, chance to buy right here. Pulled back again, chance to buy. Stop loss below. I said 105.50 is my line in the sand. It stayed well above it, right? 105.50, it's above it. So I think the dollar, possibly into even next week, is coming right back up to where it started there. Now, if it gets higher, there is a bigger pocket and inefficiency to fill. I would like to see if this dollar makes a slightly higher high and that becomes divergent. Does this get faded and actually set us up for a bear pattern going into 2025 with a weaker dollar? I don't know. Price will have to show this. Otherwise, watch for a range trade. Could be a range trade. The last time we've seen tops and bottoms on the dollar, it has been with a sideways move. Okay. If you zoom out, okay, you can see here, sideways move, sideways move. Okay. And the sharp bottoms have happened at support. So if we have a sideways move here, just be careful on your trades. If we end up breaking and going lower, or we end up breaking and going higher, there is room for this dollar to run. You know, I would think that it kind of, this squeeze kind of ran its course. I'm curious, just like everyone else, like, what is the dollar going to do, and what basket can I trade? My exposure on dollar is this: I'm Aussie dollar long, New Zealand dollar long, dollar CAD long, dollar Swiss long. So obviously, if the dollar goes up, my dollar CAD will probably continue to go well. My dollar Swiss should be going well. I might take a little heat on the Aussie dollar, New Zealand dollar, but they're all kind of built-in position trades for me. So I had the flexibility of letting price move. I've got, kind of, I'd say a few hundred pips of slack in those. So if I show the Aussie dollar really quickly, or I just show all of them, let's just show daily time frame here. So I would say this: the surprise move to me on the dollar would be, if we came back up to make a slightly higher high, but then we fade, that wouldn't surprise me, because I would expect that to either be sideways or maybe setting up some type of bear pattern where we have a range trade on the dollar. Okay. But think about this: this move on the dollar could also be the floor that's built in. If this is a B, and this market's trying to establish a C to D, that to me is the surprise move on the dollar. Now, there will be a lot of repercussions in the market. If the dollar does this and it crushes all these currencies, you're going to see this bigger push towards, getting off the dollar, moving into gold, moving into Bitcoin, getting dollar alternatives, because that is the milkshake theory. Like, when the dollar gets stronger and it sucks up all this global liquidity, it makes things harder for emerging markets. This is why the US has been the best stock market in the world for the last decade plus. It's been outperforming everything. If you look at the markets, non-US, they suck. You look at the markets with US, they've crushed it. You look at the US markets, they've crushed it. Anyway, I don't know if that's going to happen, but I'd say the surprise move on the dollar would be if we break above this 108 handle and we clear 109 and we're going towards these highs. I mean, I would be looking for a top. I would be looking for a top right here, but not forcing that trade unless I see price action suggesting that we have a topping pattern. So a head and shoulders pattern is great. A rising wedge is great. A double top is great. But if I don't see that pattern, this thing just goes higher. Well, I'm also going to measure this, and this could be something wild and crazy. There's my move. There's my symmetry. Is that likely going to happen with Trump? Probably not. That guy, I'm pretty sure, wants to see a weaker dollar. I mean, I don't know. I feel like his measure of the economy is the stock market, which is not the real economy, you know? And 2025 could be this: Main Street recession, Wall Street's fine, right? Wall Street keeps going higher. We're in this AI boom, right? AI is everything. You got everything that's in the semiconductor space, anything that's computing, AI agents, anything that's going to have, crazy amounts of margin, no people power. Everything can be done by humanoids and computers. Maybe that's our 2025 story. Okay. But if Wall Street does just fine and squeezes out another, 7, 8, 10%, 15, 20%, whatever it can muster up, if Wall Street has a good year, but we're still running at 3.3% inflation, 3.5, 4% inflation, Main Street's going to hate it. It's going to feel like a recession. Now, the consumer is strong enough to actually have a recession. Okay. But Wall Street may not really reflect that. We've had recessions in the past where stocks have gone up. That's a very real possibility. So anyway, I talked about a lot of stuff this week that could be if. I don't know what's going to happen. I'm just watching price like everybody else. So, all right, that's red on the dollar. Oil had a bit of a squeeze this week. We're still holding that floor at 67, and I am watching these levels closely. It is so surprising how quiet oil has gotten. I do think there's going to have to be a decision to be made. Now, saying that, like, we could still see oil just do this and get tighter and tighter and tighter until eventually and this is a real possibility. I could see this being a fake out and then a squeeze to the upside. I could also see this just going to the upside. Okay. If we're going to have a real break of oil prices, AVGO, let's go, baby. All right, let me see what he's doing. It's a DT trade in a second here. AVGO. All right, so I'm already up 30 cents on the trade. I think I'm just going to take, let me see if I can get out of here for $1.50. That would make up for my SPX trade this morning. See if I can get out of here for $1.50. Boom. All right, I'm out. I'm break even on that. I took a small loss on SPX, had a win on AVGO. I'm calling it a day for that. Anyway, so such a silly trade. Now, the point of this trade was to be, if I wanted to hold it for the rest of the day, as long as we stay below 217.50, I'm making full profit, which is $1.40. But if we start getting back up towards today's highs, I'm out. But I'm in for $1.10, out at $1.50 a contract. I'm taking the win, and fine, whatever. Yay me. All right, oil. Look, inflation's going higher, right? It's trending in the wrong direction. We've now seen 3 prints higher. We've had 40 plus months of CPI over 3%. That's the first time since the 90s it's ever happened. We have PCE going the wrong way. We have PPI and CPI going the wrong way, yet the Fed is cutting. We're right on the verge of that 10-year, 3-month becoming disinverted. The 10-year yield is still going higher. So it's just, these things are not going the right direction. Look at this thing. Look at this thing. Okay. This is the bond market. This is the yield. This is bonds going down, yields going up. This is not good. I keep saying this. If we're getting greater than 4.5%, this market is going to take notice. I'm serious. Like, it may not do anything to really derail the uptrends right now, but if we start getting above 4.5%, and we start creeping up to 5, there's a bit of a line in the sand at 5. You know, if we don't buckle at 5%, we are going to crash at 6%. There is no way that we can have sustainable financing on anything if we are getting that much more expensive on major borrowing costs. Like, servicing our debt would be more expensive than Medicare, Medicaid, and the military. It's insane. So I don't know, man. This is kind of wild, but this is not a good jump. This is up, 5.6%. Crazy stuff. And I mean, obviously the market's done the exact opposite since September. It's up, what is that? It's up again like 80 basis points. So just write it down, 5 and 6. Okay. I think the market can buckle at 5% and it will crumble at 6. So it just depends on if we get to one or the other. Neither one is good. But obviously, buckling is a lot worse than crashing, but both can happen. Who knows? I mean, I'm just trying to be optimistic here. It'd be nice to see this just kind of oscillate and then find a way into Q1 of actually going lower, but I don't know. The market's got to take some type of a positive prints out of inflation, but we're not getting it. Okay. And market's fading pretty hard right now. SPX getting way more directional. Anybody in my daily profit play, I'm glad we got out. Okay. NQ, look at that, fading hard. Ooh, man, this is tempting. I want to get in here. Let's see. So ES is falling hard. That was where's my 9:30 candle? 10 o'clock. There's my 9:45. There's my 9:30. All right, there's my 9:30 candle. Right there. So we had a nice little breakout on ES. And there is my pop-up candle. We're breaking out officially. Ooh, okay. I think I might take an NQ trade this morning. MNQ. Let me see if I trade this. It's $2 a point. I mean, I'm probably already late to the party. Shoot. That would have been a nice, even if I took an MES trade at 68, that's up 16 points. This thing just moves like a ton. I mean, it's already down 150 points from that high. Ooh, we got some futures action. All right, ladies and gentlemen, let's see what happens. Are we going to break fresh lows for the week? Are we going to break fresh lows for the week? Remains to be seen, but this is a very directional Friday. I'm glad that I'm out with unscathed. I'll take it. This is also why I have hedges, by the way. So if we're starting to see some vol increases, I have some hedges. MES. Take a look at these real quick. These have been in the Pulver alerts for the last week or two. Let's see, AAPL. What's this? Call. Hang on a second. What? Oh, yeah. Is this a covered call? Yeah, okay, it's fine. I was going to say, like, I did a roll. Okay, so I'm getting some Apple stock called away today. I was like, what's going on? I saw in the money. I'm like, what does that mean? Okay, so I have some Apple shares. They're getting called away today at 2:30. That's going to be. I lowered the cost basis down. I think I have it on my chart. Let me do a quick spot check on this one. Sorry, got a lot of stuff going on today. Here it is. So 227.73. This is a Pulver alert as well. I did one roll on this trade, so I put a roll in. So I did the 227.73. I sold a 230 covered call for 475. That brings the cost down to 223.35. It's getting called away today at 230. That gives me $6.65 of profit. So per account, I've got $665 times 9. That's a nice little grab on the week. Another income trade. Didn't have to chase this thing to all-time highs. I still have some shares that I own at 175 that's rolled out into March of next year. But this one is a nice little income trade that worked out just fine. Google's had a nice run this week as well. Amazon hanging out at these highs. I probably need to buy some protection on this one. I did some rolls out to March. Microsoft hanging in there. Meta is up there. Netflix fading off all-time highs. I was going to say YouTube. I feel like I have a personal victory this week. I'm canceling YouTube TV. They're up in the price again in January. I started YouTube TV at like $49.99 a month, and now they're going to up it to $82.99 a month. What is this? Is this like DirecTV after a promo period? Come on, man. So it's not worth it. I barely watch TV, let alone live TV. So I like the unlimited DVR, but it's not worth $83 a month for me. Anyway, let's keep going. Nice little win on Apple today. That's good. What else? My futures hedges. That's what I'm looking for. Okay, so I have gold futures still looking very good. MES, this is the one I'm watching. So if we come back down to the lows, this is up 40 points. This one's out. These are all to the end of the year, by the way. These are all December 31st hedges. So this market is hanging in there like, the wheels are shaking and about to fall off. These December 31st hedges could work out very, very nicely. Yeah, we'll see. So I'll keep a close eye on that one for MES. This one here is a 60-25. This one is not break even, unfortunately. So this is going to be a small loss. That's going to be like that 0.25% that I talk about a lot with my hedges. MNQ, this one's out to the end of the year as well. So if the wheels fall off on the NASDAQ, this is a bear put spread that would give me, I don't know, like $1,000+ of profit for a small, $300 to $400 risk. NQ, what do I got going on here? This is a 1-1-1 strategy. Yep, this is up $200. That's going to be a little income trade by next Friday. The Russell still looking good for profit. That's up $600. Silver still looking great for profit. That's up as well. All right. So futures wise, it's pretty much hedges and some income trades. The income trades are looking good. The hedges are to be determined. The hedges are out to December 31st. The market would have to drop, and this is the purpose of the hedge. If the market drops hard, like 3 to 5%, 5 to 10%, those are big moves for like a very short window to have like 2 to 3 weeks of trading. Anything can happen. I don't know if the Fed's going to do that. Doesn't really matter. But if it does, I'll have some hedges that help me get paid. Okay. As I said yesterday, all I'm really looking for are opportunities to just get better prices. I'm not buying stuff at highs. I'm other than like little dollar cost averaging swings, I'm just going after some income, and I'm doing it all to find risk. I think this market has gotten a little high. Let me check the AAII sentiment. It may not be high because the market still feels weird. I mean, as of last week, we're 43.3%. We did get up here a little bit on the 4th to 48. We had the 1-year high at 53. So we're not quite into like the contrarian sentiment where it's like, man, everyone's bullish and everyone's complacent. It's not really there. The fear and greed index, we're probably looking at extreme greed in the markets, but we're still neutral everywhere else. So market momentum has translated into greed. We have stock price strength into extreme fear. I don't even know how that's possible. Net new 52-week highs and lows. Are we hitting lows? That's so weird. Stock market breadth. This is another thing that shows fear because it's such a highly concentrated market right now. We're back into it's Mag 7 or bust. Okay. Put and call options, extreme greed, probably showing a big favorable long side of the market right now. Market volatility remains neutral. Safe haven remains greedy. Junk bonds remains greedy. So interestingly enough, this is neutral. So I don't think it's enough to make a judgment call out of that. Let's go to today's currencies. We're still euro on top. Pound is getting faded. My euro pound might be coming back in a big way here. Let's go euro pound. There we go. There you go, euro pound. Let's get up there and find that 200 moving average. All right. I left off on oil. I know when I was kind of walking through my charts, I got a lot of stuff going on today. I'm operating on like 4 hours of sleep. I'm a little wired. So let me just focus for a second. Oil, I'll revisit this whole idea. The floor is at 67. If we break the floor, I wouldn't be surprised to see a bear trap, similar to what we saw with the dollar. It just does this, right? If we go lower highs equal lows, then it just keeps getting choppy, choppy, choppy. Look, if we fake out and then create a bull pattern, I want to be long oil. Okay. It's pretty simple. If we actually break the floor, like firmly, so let's say we chop around here and we break the floor. If we pause, I look for a bear flag. If we pause and then slowly retrace, maybe some continuation. Okay. But I just let price kind of dictate here, because if we quickly rip back up above, it's a fake out, and that's a bear trap, and this thing's going to squeeze higher. I don't know how oil prices haven't gone higher, but they haven't. And it's not necessarily global demand. It's just we've got Saudi Arabia, U.S. pumping like crazy. You got the U.S. in 2025 likely back to the adage drill, baby, drill. We're going domestic. And our supply is going to be high. Our gas prices, which I have been talking about, go to AAA gas prices. Okay. I know this may not be a big thing, but if your current average, start to get greater than a year ago, it's probably not a good trend for gas prices. And based on the CPI and PPI we saw this week, the biggest negatives in CPI, despite things being higher, right? The biggest negatives were oil prices and gas prices and fuel prices. So if that starts to get neutral or starts to increase, it's hard not to see inflation continue to go a little bit higher. So the story unfolds in 2025. Gold and silver. Gold is down. Who is active on gold? Because gold is doing exactly what I said. We had a little 9-day range. I just said, watch out for this range. Watch out for this range. And to me, this is still range bound. Right? It's still range bound. So high, low. If this is an equal high and we still hit symmetry, I'm waiting for gold down here. I'm going to buy some more below 2,500. Okay. So these little minor day-to-day movements, this does not affect my gold positioning at all. So I know traders out there that are trading gold and trading, CFDs and trading Forex, and you got like all these little ticks and pips. They all matter. That's not me for gold. I'm more like, what's the bigger picture? Because we've had such a good bull market, I could see gold going sideways. Okay. I could see gold giving us an ABC correction. So either 2,500, which I've mentioned this a lot of times, 2,500 or 2,400, I am going to wait for those levels to then start averaging back in. I'm not interested in this. If it goes higher, GLD will benefit. Okay, my gold futures are still way down here for full expiration. They'll be fine by December, January. I doubt we're crashing on gold. All right. But as far as where I want to get back in, I like gold longer term bullish, but I want to get a better price. And that's pretty much everything in the stock market. Anything in my trading is, if I don't like the price, I don't chase it. You know, I will wait. And even if we did this, look, if we went up again to all-time highs, okay, so I've got GLD that benefits from that. But all I'm going to look for is, okay, I've got a 100 moving average and a 144 moving average and a 200 moving average. If we pull back to those levels, I'm still interested. I know it might be at a higher price than where I wanted it here, but it's still a technical reason for me to get into the market. Every stock I look at right now, look, I don't care if Tesla goes up to $600 and I don't get a trade. I'm still going to wait for a pullback to my moving averages. If Netflix goes up to $1,000 and doesn't pull back, I'm still going to wait for a pullback to my moving averages, right? They're there for a reason, right? They're dynamic support resistance for a reason. So again, it's just call it simple technicals, but I'm going to wait, and hopefully my levels get hit and my pullbacks that I'm looking for get hit. All right, so that's gold. Silver, same type of thing. We've had a pretty decent 2-day drop on silver. It's still very well supported around 29 to 29.50. And I mean, hopefully we just continue to show some basing here. Base around $29.50, base around $29. I don't necessarily want to see silver breaking below $28, even though it is also very well supported at 26. But the structure that I have on my chart, you can see this trend line here. This is still pretty well supported. Lots of support on silver. We could still be very supported here. Resistance becoming support. But if we hold here, I'm hoping that we just kind of accumulate and then we have another breakout to the upside. And this is target one. 2025, a bull market on silver would be fantastic. I'd love to see a run to, $46 or $47 on silver. Okay. All right. Bitcoin. We had 102,000 yesterday, 102 and change. We're back down to 100K. Same thing on Bitcoin. I'd love to add some more exposure between the 90 and 80K spot price. How will I do that? Probably by just adding more to my wallets and also adding some IBIT exposure, some FBTC, and maybe looking and see what MicroStrategy or Coinbase is at. But most likely sticking with the ETFs, I'll trade IBIT most likely, just because it's a little bit cheaper than FBTC right now, and I can also trade the options. Probably just put in some credit spreads, maybe a debit spread. I put in credit spreads in that one because I wouldn't mind taking the assignment. If I had the assignment and I keep 100 shares or add another 100 shares to what I already have of it, I've got, I don't know what I have. I think I might have 1,000 shares total of IBIT, maybe more. Let me check something here on IBIT. IBIT, I have 2, 5, 9, 11, 15, 16, 17, 18, 19, 20. I've got 2,100 shares of IBIT. So yeah, I'd add some more, but it would be at a better price. Same type of thing. This is another, it's just like everything else I'm talking about. Here's a 21 moving average. I'm not that interested in adding it a 21 moving average. Here's a 50, here's a 100, here's a 144. There's a price level and inefficiency level that I'm looking for. Does it find it? Maybe. Right? So if we break this structure here, maybe we hit symmetry. If we hit symmetry and then break the structure, I'd like to see like an ABC pullback, find me some support. I'll start to dollar cost average in again, and we'll see if we get back to these highs. We'll see if there's another chunk to the upside, but give me a better price. To me, it's that simple. I'm going to wait. Okay. If it goes higher, I have shares. I have Bitcoin. It's a buy and hold. I'll gain from that too. But if I want to add to my position, I'd like to get a better price. Okay. Ethereum hanging out near the recent highs. That's fine. All my trades on EETH should be full profit by the end of the year. I need to stay above $60. Copper, China's, this you love me not type move on China. So copper keeps going back and forth as well. Japanese yen, that's futures. I'm going to look to see if I get something in 2025. This actually would be a pretty nice trade. I'm not going to lie. I'd love to take some option trades on Japanese yen futures. I mean, I don't know if I'm going to speculate like I did here. I had a nice little run on FXY, and then I had a couple of stacked futures credit spreads, actually debit spreads in this case. But that's probably all I'm going to do is just trade, spreads on it. So we'll look for that one. If that lines up going into 2025, that could be a pretty nice trade. I do have some shares on EWJ. I might regret this. Okay, not necessarily to the downside, but if I started here and I add here, am I getting kicked off, Nick? Or are you joining me?
No, I had to come talk to you. It's been a
Oh,
minute since I've spoken with you. Keep
yeah. What's
going.
up, dude?
I was listening to you. Keep going.
Okay. Well, I was just saying on the Nikkei that I'm trading a little bit of exposure on EWJ, and I'm looking at this as if the Nikkei from where we had that July to August slam, that I do think that the way I'm trading it is EWJ. That cuts out the bottom 15% of the Nikkei 225. It's not highly concentrated, favoring like the top 10%, but it has cut out like the trash. And I think this high to low. Look, I'm gonna take a position here, position one, and a position two, which was a 27% discount. So if I dollar cost average into that, and the Nikkei gets back to all-time highs, it's like a 20-25% gain on the index, and I'll take the trade. If we go to all-time highs again, then maybe the EWJ works out fine. I'm putting like $3,000 into it, so if I turn $3,000 into like $1,500 profit, that's fine. I'll be happy with that. What else? Argentina. This is another one. Nick, you maybe heard me talk about this one for the week. I like Argentina. It's had a heck of a run. It's been one of the best country ETFs outside of the U.S., obviously. But
Yeah.
it looks like every other stock that I'm talking about, it's not at a price that I want to get it. So it's a cheap enough ETF that I'd like to trade it, but where? Not the 21, maybe the 50, definitely the 100. This 100 to 200 moving average, I will add some exposure to ARGT.
Chris, I popped in here because especially I heard you saying something that really resonated with me. Just an important. These are tough days right now, Chris. I think you're in the same boat as me, where you show up and I heard you saying, "Give me a better price. Give me a better price." I feel the same way with a lot of things right now. My
Yep.
goodness, it's like everything is priced so richly.
Yep.
And what the reason I bring that up and reason I just wanted to pop in and chat with you about it is just because it can feel like you're going insane when this stuff is just going up every day. And it's like, well, what am I doing? Not just full porting in the NASDAQ right now. But the thing is, these are also the times where it takes a lot of discipline not to get sucked into what feels like a vacuum cleaner right now. I mean, this market, I go into CNBC, Chris, and it is just adamantly bullish. I mean, I feel like I listen to CNBC because it helps me, just get into a mode of knowing what's going on. They got a lot of people coming on interviews and stuff.
Yep.
Point is, though, I feel like I get on there. I feel like I'm getting sold to buy this market at these prices. And it's just like, I think it's really important to take a mental moment, to take a pause and just say, when you're trading at PE ratios that are similar to the ones that traded prior to major market sell-offs and corrections,
Yep.
you have to just give yourself a gut check and just say, look, I won't be the one to chase this thing. We've been in this business for a long time, Chris, you and I mean, 2021 was a more recent similar experience for many people who are listening right now. The crypto buzz was so hot. It's not to say that these things are not going to have brighter futures ahead, but you have to remember, just because, a beautiful house, if everyone envisions a beautiful house, you can still overpay for that house, or you can get it at a good price when, the times are better. So just wanted to point out that there's a lot of great value company. There's a lot of companies out there. There's a lot of crypto might have a great bright future, but it also matters what you pay for it. Look how quickly today, I mean, and this may just be a quick blip, but look how quickly, this market can get scared. That's a quick move on the NASDAQ here this morning.
Oh, yeah.
So just something to think about. All morning, Chris, I issued a word of caution to everybody because it feels like euphoria, feels like 2021 again. And, we know how that ended.
Yeah, I mean, Nick, I think that it's interesting how the market is playing this week, where it's like you had the big rip on CPI and then the fade on PPI, and then today is following through with that. We're right back towards the weekly lows on the SPX. We're coming into the Fed next week, and it's going to be, this is perfect, right? It's going to be bottom of the ninth. The Fed's up to the plate. It's a full count. They get one pitch. What are they doing on December 18th? Are they going to help the market get back to all-time highs, or are they going to say something stupid that the market doesn't want to hear, and down we go? And look, a 28, 29% rally for the year, can still be 20+%, right? But it's going to be an interesting spin when the financial advisors are like, oh, the markets are still up 20%, but it gave back like 5 to 10% of it real quick.
Yeah.
You know,
Well,
so
I mean,
it's just sentiment how it finishes.
Look at this move in 2018. I've been doing a lot of this recently, scrolling back on the chart and just reminding myself and the listeners
Yep.
that markets don't go up forever. Here's a year, 2018 feels eerily familiar. That looks like the chart right now. That literally looks like, imagine that this is the August and May or summer months. Looks
Climbed a
real
wall of worry.
similar.
Yep.
Yeah, and then just boom, 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 and then look how quickly we gave back so much of those gains. So again, I heard you say this the other day. I feel the same way. I am not a bear on this market. I don't see a big bearish catalyst. This was a big trade war freak out. I don't know what's going to take the market down, but what makes me a little nervous right now is just simply valuations. I just see the expectations for this market are so high. Prices are very rich in a lot of things. And that just makes me say what you said earlier. I got to wait. Give me better prices and I might play ball, but I can't do anything with these prices for a lot of indices, sectors, stocks that I like.
Yep. I'm right there with you. And like I said, like if you heard me all yesterday, like I sounded like I was griping and I was like an old curmudgeon and I'm just angry at the market. Like, look, I'm not angry. I'm surprisingly having like income trades every single week or every couple of weeks for expirations, like income trades doing fine. I was a little caught between like the hedge levels out to the end of the year, knowing that I'm paying for it. And I've had hedges that have paid out this year and I've had hedges that have lost this year. It's like, it's kind of a wash. It was there when I needed it. It helped in August. It helped in April. It might help towards the end of this year, maybe. Like if this market really tips over aggressively, and like I said, I mean, we go 28, 29% on the year, that fades to 22. It still looks good on paper, but it might feel like crap in the last 2 weeks of trading. And that momentum carrying over. And another thing, as far as like, the tops and like encouraging everyone to buy, don't we have like, isn't Trump going to like ring the New York Stock Exchange bell like this week or next week?
He did it yesterday.
He did it yesterday, right? Okay. Yep. I was like, if that's not like another kind of sign of like this market's getting toppy, like because he is a president that's going to tweet or chat or talk about like where the stock market is. And I'm telling you, there could be this complete disassociation between real economy and stock market, right? Main Street and Wall Street. We could have a legitimate Main Street recession where inflation is getting higher, everything is more expensive. Again, it keeps getting worse. Housing prices aren't coming down. We're still unaffordable. Borrowing costs are going up. It's like that's going to be felt by Main Street for sure. Wall Street, you've got all these built-in mechanisms like, okay, the stock market's ripped and all these stocks have had all these gains. You also have this buyback program that all these stocks like to do to kind of fluff their price up. You also have mergers and acquisitions. Like when things get a little gnarly, those that have a lot of money buy those that don't. It's like that still props the market up. And so these bull markets, especially before they officially turn, there's like these like kitchen sink efforts to kind of keep things going. But I don't know what the big like volatility event would be to like scare the markets off into a big correction, but I'm just braced for it. Like I just see
Chris,
so
my
many
point
stocks
too
like
with
this.
the thing is like, okay, we don't know what the event's going to be. And the beautiful thing about this is we don't have to be. You just have to know. I've been making this analogy to 17,000 times, but think of a boat, right? If everybody's on one side of the boat, which is right now, everybody's bullish, right? When something comes along, if everyone's on one side of the boat, the torque of that boat can be much more violent. So it's just one of those things. I don't know what the catalyst can be. I'm not a bear. I'm not saying today's going to be the day it's going to drop. Today's going to be, I'm not doing that. Right.
Sure.
It's gonna have some sort of bearish catalyst. It always does, right? A bear case is always around the corner for the market. You can be one of those perma bears on Twitter and you can do all that and say, haha, I knew it was going to happen. It's inevitable. There's always a bear case that comes out of somewhere. But the point is, when sentiment is very one-sided, we've talked about this a lot on my segments. I've been talking about the put-call ratio almost every day. Put-call ratio is real low. You got a lot of people buying calls out there. Call premiums going crazy, but puts are cheap. And the point is, we don't know what the catalyst is going to be. We don't have to know what it's going to be. We just know that sentiment is one-sided. Be careful, because when that bear case comes along, if you don't have stops in place, if you don't have hedges, if you don't have, you mentioned earlier, hedges have been a frustrating thing this year. Well, that's totally fair because there's been so much this year that has been out of the ordinary. I mean, we've had 2 back-to-back 25+% years in the stock market.
Yeah.
That really does feel like, okay,
3 times ever. Ever.
maybe it's time to be a little bit more diversified, a little bit more hedged, a little bit more careful going forward, and not let these last 2 years deceive us and make us think that this is the new norm, right? That's the stuff that's top heavy central, is when people start saying, this is the new norm. We're going to see another 20% next year. I think that, the expectations being really high it makes good sense why, when everybody gets bulled up, it is very easy to disappoint the market, right? When
Yeah.
everybody is so bulled up, when there's a good, healthy bull bear mix, the bulls can look towards and say, hey, that's not as bad as we thought. Like, there's a little bit more room for error because
Sure.
people are balanced.
Yep.
Right now, I see everybody on one side. Doesn't make me I'm getting short right now, it's going to go down. It's just that when it goes down, I think it could be pretty rough. I think it could be pretty quick.
And as you mentioned, protection is quite cheap. Like I did I've got a 608 by 590 bear put spread on the SPY. It cost me $4 for an up target of $18. Like
Wow.
you can get like 3-to-1, 4-to-1 payouts. And again, like my timing might be crap, but if I'm right, I mean, like right now, it's like I'm positive like $2 to $3 on my $4 position. I'm already up like 50%. But
Yeah.
I'm going after a big win. Like I want that hedge to be something that helps me, offset some of the inevitable drawdown that happens if we do pull back to, the 50 or 100 moving average. Yeah, I mean, this is an interesting spot to be going into next week's trading because we're on the verge. Like, I think this is a key level. This is a key level. If we're sitting right at it going into next week's trading, I would say that Monday to Tuesday, surprisingly, would be like quiet days, and it's all going to be about the Fed. But it's our last full week of trading, so there could be some really wild stuff happening. Are we? Do you want to do? Are we doing a FOMC session on Wednesday?
Yeah, for sure. We'll
Okay.
definitely make a show
If
out
you
of it.
if you want me to jump in, like I'm happy. I mean, I'm watching just like everybody else, but
Yeah.
price action is going to be, I think, pretty wild. It could be like a giant volatility nothing burger, but man, it's like it's the last major catalyst that I see between the Fed and the BOJ. BOJ is probably more forex exposure, but man, the Fed this year, the stock market. I mean, now that we're just a little faded off these highs, I mean, it's 57 all-time highs is pretty darn good. But
Yeah.
can we get to 58 or 59 or 60 with those last 2 drifty weeks of the holidays? Maybe. Like the Fed could kind of set it back in motion and say everything right to reassure the markets, or Jerome Powell could be honest and be real and say that inflation is not going the right direction, and they're going to have to consider maybe pausing more in 2025, but they won't. They're going to say the same two-sided stuff they've always said, and it's
Yeah.
up to Price to kind of interpret what we're going to do.
Yeah.
So, but it's going to be interesting next week.
I mean, yeah, we'll definitely be doing we'll definitely do a show, and you're, of course, always, we look forward to having you on, of course. For everybody who's hanging out with us, guys, do us a big favor. Chris Pulver is a regular show host here on the A1 Trading Show. The other thing I want to mention is Chris Pulver also offers his trades inside of our Discord channel. If you'd like to get access to those, the Pulver alerts, send us a DM on our website. We'll be happy to set you up, get you some information about that, or you can go to a1trading.com/pulver-alerts. Here's the information there. Or you, again, like I said, you can speak directly to our support team, and they can get you set up with a membership. Chris, thank you for coming on. We'll maybe just call it good unless you want to keep going. I mean, you're welcome to, but
I wanted to leave. So just in the spirit of this week, I would like to leave everyone just this. I know we're going to talk about this more next week, but I do think that 2025, look, Nick, every year is never easy. Every year, right? Like, if anybody thinks that this is easy, at some point, that's the person that's never seen the other side of it.
yes.
So, I mean, I this week was kind of my public service announcement to all the traders that had the experience of 2020 and 2021, and they killed it, and then they all disappeared in 2022 because they got killed. Like, they got smoked in 2022. It feels a lot like that same type of setup, is that we're building up for all this, like, can't do anything wrong. The markets are going to rip forever. Dude, these levels and these valuations, reality has kind of gotten loose, and I'm just playing it cautiously. I'm not bearish, like same thing. I mean, I think it's on the same page. Like, I'm not bearish, but man, it's like there's so much more risk and faster risk to the downside if this market just doesn't have everything perfectly spoon-fed to it. Like if this
I agree.
market has a little bit of a tantrum, we could see 3, 5, 10% real quick. So
The
just
thing
be
is,
cautious. That's all.
you give me that 10% pullback and I'm probably back in the game. So it's not
Same.
that you know what I mean? It's like not
Same.
that's a good evidence of if you're really bearish, you're like 10% is just the start. It's going to go much further than that. And so, we'll have to see, but playing it by ear, staying one day at a time. And Chris, thanks for coming on the show. Appreciate it, man.
For sure, man. Thanks. It was nice to talk to you. It's been a couple weeks.
I know I had to jump on. I saw you. I was like, this is the perfect time. This is a good mental check to just kind of get back on the same page. But anyways, guys, thank you very much for watching. Chris, shout out. Thanks for coming on, and everybody have a great weekend.